Good morning, everyone. This is Anne Marie. Very quick report with the SPY, the Qs, and the IWM this morning. We had quite a dip down, but again, trying to do this midweek report, I just sound like a broken record because I'm saying the same thing, and it's because the same thing is happening, and I want you to see it from a weekly perspective so you understand what's going on. What's the benefit of coming to the realization that a chart is in a range of trading and it is not going anywhere until big money resolves it out of the space? Well, the biggest thing is to realize that you should not be trading directionally in this kind of environment unless you're a really good stock picker and you know exactly where things are going, and indeed that chart is moving with enough momentum to ignore what the broad markets are doing. If that's the case, that's fine that you're a great stock picker and your chart's doing what it's supposed to. If you're not a great stock picker and you're just looking for something good to trade, you're going to have three choices for what happens to you if you take a directional trade, meaning a trade in something where you think it ought to go somewhere. All right? The first choice is it goes where you want it to. That's great. The second choice is it does essentially nothing and you languish, and so your money is not giving you any returns in the short run, and you're developing emotional anxieties because you're invested in some space that is not moving. And then third, it runs against you. Okay, so three choices. Only one of them is in your favor. That gives you a 33% chance or so, 33.333, chance of being right, and a 66.666 chance of being wrong. Yeah, those are bad odds, right? You don't want a 33% chance that your plane's going to land well. You really don't. You want that to be a little bit bigger than that. You don't want a 33% chance that you're not going to crash your car every time you go out in it. That's a really bad number. So what's the moral of my diatribe right here before I go into the actual numbers? It is when a chart is unresolved, stay out if you're looking for something directional. Wait for it to resolve. Here's the great thing about charts. Don't think it's going to run away from you, because it's not. It's going to come back and test the breakout areas of relevance. And so if you want to focus on one place that you can get really, really good at something, learn how to identify good support and resistance. That's going to be the best thing that you can ever do for your personal career in trading. Learn to identify those levels, and you will see that if they are important, they will be retested, and if they are definitively being rejected in order to move to the next level, either up or down, it is going to tell you at the point of rejection. And so right now, because we're looking at a weekly chart here, you can see all this major congestion. These charts are not going anywhere in the short order, and it has been my thought that we spend literally the entire first quarter here in one way or another, bouncing out a little bit, coming back down, going down a little bit, coming back up. But this first quarter looks really unresolved overall. Big money has got to come in and move in the general direction, and so far we are not seeing that happen. So we bounce off resistance and we bounce off support. And that's all we're doing. We're going from top to bottom and bottom to top, and we've been doing that for, let's see, 1, 2, 3, 4. Here's 5. 5 out of the last 8 weeks. So again, that's a lot of motion sitting in the same place. Let's take a look at the IWM. We'll go backwards. Oh, wait, didn't give you the levels. I should do that, shouldn't I? For the Qs, we need to see it resolve the week and then confirm out of the ranges. So it either has to lose 100.50 at the end of the week and then confirm it, or breach 104.50 and confirm, right? Other than that, it's just sitting in the same space moving over and around and everywhere instead. All right? As I mentioned earlier, when we sit in spaces like this, iron condors are usually the very best things because they provide income generation in a very cloudy space. You only want to take iron condors in a cloudy space. You don't want to take it anyplace else. And so here, pretty cloudy, and look at this, even more troubling in terms of sideways action. The IWM is looking very noisy, sitting in the top quadrant of this formation here and bouncing off of support again this morning. Remember, what you want to look at is relative momentum, and everything looks pretty flat right there. Levels to watch, 121.13, and initially, or in the grand scheme of things, 110, but we do have a space that's forming newly around 113.60. And so if we take a look at that, that is going to provide us with a pretty nice swift trade to the bottom of the channel. But again, no resolution per se whatsoever. Taking a look at SPY, let's get this to the right template because we are looking at this little serrated thing is a Donchian channel, which is fantastic actually, but we're not going to talk about those today. Here is the SPY looking a little bit more like the Qs than the IWM in terms of the ranges, but we are seeing the ranges 199.90 to 205.60. We've got to close and confirm. If you are a swing trader, do not be afraid to wait. This is not going to run away from you. You put a limit order out there, it'll come back and take it for you. Honest to goodness. We as members here at the Trading Book, we know that they come back to take us because that's what we do. We watch them breach out of our space and then we wait to take the limit order if everything else looks good, and it picks it up all the time. All right? And so really, don't be afraid of that. If you want to look at the midline for space, intraday trading, or short-term swings moving from day to day, we've had a tremendous amount of good fortune moving up through the edges and then down into support, trading level to level. If you're looking for a swing event, folks, not going to be here. I know a lot of people really like trading breakouts and breakdowns, but unless they are going directly into target and getting out right away, that's a very troubling strategy to use at this particular time. As a matter of fact, it's failing. Statistically, it is absolutely failing. And so we've got to be super careful about that. If you do trade a breakout or you do trade a breakdown, make sure that your test into resistance or support is promptly used to take profit. Else you're going to be sitting upside down in a trade. All right, good luck, everyone. I will see you next week with another update. I really hope it's not going to be the same thing, but I'm thinking it's gonna. So we'll just watch it. We know what we need to see for the trend cycles to break, so let's watch them. Let the charts tell us what to do, and then we'll do what the charts tell us what to do. Let's not anticipate and get into that space. We are not managing billions of dollars. So we are very swift little speedboats that can move in and out. We have that power that others managing unbelievable amounts of money do not, and we can use that to our advantage by waiting to see what happens and then following along. Good luck trading.